Ladies and gentlemen, welcome back to Boss Economics World, the one channel where we pull no punches when calling out fiscal follies, central bank spin, and political misdirection. If you're tired of sugar-coated nonsense from the mainstream media, you've clicked into the right financial reality check. Today, we're diving headfirst into what Federal Reserve Chair Jerome Powell, aka the Wizard of Economic Oz, said in his Senate testimony this week, and let me tell you, calling this economic policymaking a tightrope walk would be far too kind. From tapering rate cuts, to tariffs, to inflation dynamics that conveniently stay somewhat elevated, to Elon Musk moonlighting as a government advisor, yes, that's a thing, we're peeling back the layers on what these developments mean for everyday workers, global investors, and yes, the looming American recession everyone else is too polite to mention. Spoiler alert, patience may not be the virtue Powell thinks it is. Strap in, because this one's a doozy. Let's dig into the data, expose the dysfunction, and put modern economic myths to rest. Let's start with Powell's key statement: we do not need to be in a hurry to adjust our policy stance. Ladies and gentlemen, grab your decoder rings, because this is central banker speak for we're stalling. Powell insists that holding rates steady is the careful, patient road to economic stability, but let's talk about what that really means. The main points Powell highlights are: 1. Inflation is somewhat elevated at 2.6%, still clinging above the Fed's 2% target. 2. The labor market is broadly in balance, with unemployment at 4%. 3. Reducing rates too quickly risks reigniting inflation, reducing them too slowly risks choking growth. Sounds reasonable, right? Wrong. Behind this diplomatic jargon lies a fundamental economic double-bind. The Fed's balancing act is superficial at best because it's not acknowledging the bigger structural distortions in play. Powell conveniently overlooks how slowing interest rate cuts prolongs small business collapses, constrains cash-strapped households, and tightens credit access for the very working classes he claims are not at risk. Now, you might ask, what's the big deal if rate cuts are delayed to protect against inflation? Here's the kicker: we're already in a precarious debt cycle. Corporate debt levels as of Q4 2024 have ballooned to $12 trillion, an all-time high, according to the Federal Reserve itself. With higher borrowing costs persisting, companies are not just failing to expand, they're going bankrupt. In January alone, a whopping 38,800 businesses filed for bankruptcy, the fastest pace since 2008's great financial crisis. Patience isn't a virtue here, Mr. Powell. It's a slow death sentence for the parts of the economy too fragile to wait. And when those dominoes fall, they'll take middle-class livelihoods with them. Powell dropped a classic, politician line, in his testimony: it's not for me to say whether we're experiencing a soft landing. Translation: the Fed doesn't want to admit that it's holding on by a thread. Let's zoom out for context here. What's a soft landing? In theory, it means reducing inflation to target levels, 2%, without triggering massive job losses, falling wages, or shrinking GDP growth. In practice, we're not landing softly, we're stalling midair. Why? Because inflation remains sticky, as Powell himself admitted. Core inflation, which excludes volatile food and energy prices, is stuck at 3.5% as of Q4 2024. Housing inflation, another critical indicator, continues to rise. With rent increases averaging 6.1% year-over-year, households are experiencing inflation like it's double the official figure. And yet Powell insists that inflation is anchored. Anchored? To what planet's economy, Jerome? Add to this the glaring threat of housing deflation, where price growth grinds to a halt even as homeowners' equity plunges thanks to stagnating wages. If Powell keeps waiting for inflation to abate while suppressing rate reductions, all we're doing is ensuring a prolonged credit crisis and widespread economic fatigue. Now, let's talk jobs. According to Powell, the labor market is broadly in balance, with 143,000 jobs added in January and unemployment sitting pretty at 4%. Sounds rosy, but let's dig deeper into the real metrics the Fed doesn't shout from the rooftops. Wage growth adjusted for inflation dropped by 2.1% over the last year, shrinking disposable incomes for the majority of American workers. The labor force participation rate remains stuck at 62.7%, miles below its pre-pandemic levels of 66%, signaling that millions are still sidelined. Temporary gig jobs now account for 18% of total monthly job gains, meaning less job stability and fewer pathways to upward mobility for the working class. And here's the cherry on top: layoffs in the tech and finance sectors show no sign of letting up in Q1 2025, with Meta, Amazon, and Goldman Sachs collectively eliminating over 50,000 positions in the last 2 months. Ladies and gentlemen, this isn't balance, it's attrition. Workers are running on fumes, taking precarious gig roles, juggling multiple jobs, and accepting shrinking paychecks just to survive inflation, a reality Powell refuses to address. Right when the economy needs clarity, in steps Donald Trump with his bag of policy grenades. Keep in mind, These are the same pro-business antics that politicians like to sell as growth-enhancing, when in fact, they're stoking inflation, strangling supply chains, and cranking up uncertainty to 11. Tariff terrorism. Trump's expanded tariffs on Chinese goods, along with levies on Canadian, Mexican, and European imports, threaten to jack up consumer prices. Research from the Peterson Institute indicates these tariffs could add 0.7 percentage points to inflation directly and knock 0.3% off GDP growth annually. Deregulation disaster. Trump's push to dismantle the Consumer Financial Protection Bureau, CFPB, with Musk's gleeful support, is another disaster waiting to happen. Without this watchdog agency, who's keeping Wall Street in check? Nobody. A repeat of predatory lending practices is a real possibility, sabotaging both consumer confidence and credit stability. In the words of Adam Smith, the invisible hand doesn't work when it's handcuffed by corruption. Okay, I made that up, but it fits. Ladies and gentlemen, is this real life, or an Onion headline? Elon Musk's so-called Department of Government Efficiency, DOGE, is meddling in federal payment systems. Powell claims there's no direct interference with Fed systems yet, but can we really trust Tesla's Twitter dad to safeguard taxpayer money? Transparency is at an all-time low, accountability is a joke, and billionaire meddling is the new normal. What's next? A SpaceX moon base for processing Social Security checks. Don't laugh, this is where we're headed. To summarize, Powell's testimony is just the latest chapter in a macroeconomic mess that grows more unsustainable by the day. Here's the big picture in pure economic terms. 1. Stalled rate policy is suffocating small businesses and deepening inequality. 2. The labor market is a house of cards propped up by gig work, temporary gains, and falling wages. 3. Trump's tariff and deregulation agenda is stoking inflation and eroding the fragile recovery we might have had in 2025. 4. Economic interventions by unsupervised billionaires are prioritizing private gain over public trust. Friends, the harsh truth is this: the average American worker is footing the bill for delayed economic interventions, mismanaged policies, and billionaire experimentation. Inflation may be sticky, but somehow, corporate profits remain higher than ever, and Powell's selective patience speaks volumes. Don't buy the spin from the powers that be. This soft landing they talk about isn't soft, it's a crash landing without a functioning parachute. That's it for today, folks. Make sure to smash that like button, leave your thoughts in the comments, and subscribe to Boss Economics World. Keep your wallets close, your skepticism closer, and always question the narrative. Until next time, stay sharp and stay broke-proof.